Britta, let me ask what you see in terms of the fallout from oil playing out in equities.
Good morning. Well, fortunately, we already had an underweight position in oil stocks running into the recent crush in oil prices. And still, when you look at the oil majors, you don't see them really adopting yet to what we've seen in terms of the oil price. Normally, that can happen, but it's certainly a very, it's a situation we never ran into before right now. So for now, we do continue to be careful on oil stocks. Certainly, oil stocks have been driven always by cash flow improvements, and cash flow certainly by now is very much under pressure, as is CapEx, as costs need to be cut, and therefore growth needs to be revised down probably for longer. So it's not only a short-term perspective you need to have here.
Yeah, Britta, good morning to you. Oil companies have typically been big spenders of CapEx, big payers of dividends. The fact that both of those seem to be under threat, do you think that is making people rethink their strategy at the moment?
Yeah, I mean, certainly they, as you rightly pointed out, dividends have been a big component in investors' interest in oil names. So cutting dividends and not being able to pay them anymore to that extent certainly is an issue. And it's not only because, some other stocks needed to cut dividends as well, but that was partly more for political reasons. Here we have a cash flow issue in a lot of the names. Therefore, there's a fundamental issue. There's a dividend caveat. And also when you take into account the ESG discussions we have, then certainly also energy stocks have not been on top of the list of many investors anymore.
Well, and you've been underweight energy anyway. Britta, are there any sectors that you think are going to benefit from the drops that we see, not just in oil, but a lot of inputs? I mean, zinc costs are down, platinum costs are down. There's a lot of deflation in basic materials. Is that going to help anybody out on the other side of this thing?
Well, maybe medium term, certainly stocks that or companies that use commodities as an input factor, and certainly here you'd look at chemical stocks. But for now, I think even for those names, it is more about the overall economic environment, and the oil price, at least to some extent, tells us something about the state of the economic environment. So I'd be careful to interpret it as a too positive factor for other cyclical names like chemicals for now, especially after the recent rally we've seen in some of those. So medium term, yes, a positive, but we certainly need some stabilization or more visibility of on the slope of the recovery to make this a real positive for some other sectors.